Welcome back to TechKidFX for another AGIX price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the AGIX chart, which at the time of this recording is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. I'm also watching a very significant high at around the $0.5 mark, because a break above that significant high will trigger even higher prices and continue gearing up. We have also continued to obey the Elliot structures, where we had been seeing a bit of a breakdown to the lower side in the formation of this wave 2 in a move that managed to get into the minimum retracement area, which lies between the $0.35382 mark and the $0.28234 mark, in a move that gave us a low at around the $0.2854 mark. And having managed to get into the minimum retracement area in the formation of that wave 2, I now believe that AGIX has bottomed out in the formation of that wave 2, and whatever we are seeing at the moment is the start of a massive run up to the upper side in the formation of this wave 3, and all this is playing out after we fully peaked in the formation of a larger Elliott wave count 1 to the upper side, and that was after seeing a 5 wave structure to the upper side of this Elliott wave structure right here in red, having the wave 5 giving us a peak at around the $0.67 mark, and also completing the formation of that first wave to the upper side. And before all that played out, we had been seeing higher prices in this 1-2 setup to the upper side before starting our Elliott wave structure. And before I get further into the technical analysis to give you the short-term scenarios and also sketch out my target areas to the upper side in the formation of that wave 3, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to first sketch out a target area to the upper side in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that now gives me a target area to the upper side in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.34051 mark, and that is the minimum that I'll be expecting this wave 3 to the upper side to do. And because of the impulsive nature in the formation of that wave 3, I'm also expecting to see a 5 wave structure in formation within the formation of that wave 3, having the wave 5 fully maximizing our target areas and also giving us the high for that wave 3 to the upper side. And this is the micro Elliott wave count that is going to give me the short-term scenarios here on the AGIX chart, and I believe that is better seen here on the 1-hour chart. So jumping to the 1-hour chart for further analysis and to give you the short-term scenarios, you can see that after seeing our low in the formation of this larger Elliott wave count 2 within this blue target area, we started this massive run up to the upper side of being the Elliott wave structures, where you can see I have this Elliott wave structure in white, which is a fractal wave within the formation of that larger Elliott wave count 3, where we have now peaked in the formation of that first wave in a move that gave us a high at around the $0.5944 mark. And having seen the high for that first wave to the upper side, whatever we expected next was a corrective structure to the lower side in the formation of this wave 2, and using the Fibonacci's, connecting them from the low of the first wave down there to the high of that wave 1, I was able to come up with a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.78 as a maximum, which is a target area that lies between the $0.43988 mark and the $0.35216 mark, and it is within this white target area down here that I was expecting to see the low for that second wave. And you can see that we have seen a retracement into the target area in a breakdown that has now given us a low at around the $0.38847 mark, and there are very high chances that we have now bottomed out in the formation of this wave 2, and whatever we are seeing at the moment is the start of a massive run up to the upper side in the formation of this wave 3. And by first giving you a measure from this low that we made down here, you can see that the market is up by more than 10.25%, which is a very nice bounce to the upper side. And sketching out a target area to the upper side in the formation of that wave 3 using a trend-based Fibonacci, connecting it from the low of the first wave down there to the high of that wave 1, then dragging the fibs to the low of the second wave. That now gives me a target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.88056 mark, and that is the minimum that I'll be expecting AGIX to do in the formation of that wave 3, which is the scenario that I'm expecting to play out here on the short-term scenarios. And before all that move plays out, there are key moves that we need to continue watching over here for us to still say that whatever we are seeing is the start of this impulsive wave to the upside in the formation of that wave 3. We need to continue holding above the 20-day MAs, both on the 1 hour chart and also on the 4 hour chart, so that they can continue giving us the support that we need for us to continue gearing up, and also watch for a break above the significant high at around the $0.5 mark. And the moment we manage to break above that significant high, then I'll be watching the high in the formation of this first wave at around the $0.59183 mark, and a break above that high, then that will be total confirmation that we are back in the formation of that wave 3, and that we are going to fully maximize our minimum target areas at around the $0.8874 mark. So that is what I'm expecting here on the short-term scenarios. And getting back to the 4 hour chart to take a look at the indicators, here on the RSI we are trading at around the 51 mark, meaning we have massive room for us to fully support higher prices. Also taking a look at the MACD, on the MACD we have been able to print a bullish cross, fully supporting higher prices. So let's be patient and see how that plays out, and I'll be keeping you updated.